has a look ahead at this week in Markets Now.
Welcome to Markets Now. Chuck Shelby, Risk Management Commodities, joining us. Well, last Friday, Chuck, we ended with row crops higher on the day, but for the week, we were actually lower in spite of the fact we took a lot of yield potential off the top end of that crop. So what gives? Why were we lower?
Well, it was a holiday weekend. We saw, evening up from funds. We started out the week really good, but by the end of the week, we'd sold off and we had some good exports in beans. I didn't see a whole lot in corn, anything new. So the market just didn't want to take the risk of the holiday weekend. There was some talk of some moisture coming out the following week. So overall, just kind of a sloppy, choppy week, light volume, and we ended up slightly lower. This new week, though, a lot of new information, see what the weather holds for us and see how we end up the following week.
Yeah, and with this crop getting pushed, obviously there's talk of early harvest. And what is your advice to producers right now in terms of marketing this year? Do you store or do you sell off the combine?
Well, one thing we have to consider as producers, how much it costs to hold on to that grain with interest rates where they are and certainly the storage fees. I think in the corn market, we can rally. But again, we have to consider how much can we rally and the cost of holding on. So there's other methods to hold your crop. You can sell it and buy some call options in the deferred months to have re-ownership in position. A lot of producers are looking at selling soybeans because they are a price that's favorable to them. It's a price they can make some money. So I think producers are looking to sell more beans and store more corn. But again, you have to consider your cost to do that.
Yeah, so get into the details of the cost. What is the cost to carry this year? What's the cost of storage?
When you look at storage to get out there into the new year, you're probably looking from 18 to 25 cents, depending how long you want to go. When you look at that cost and the cost of money, I think there's some options out there. You can buy an at-the-money option out there for approximately the same cost in the March contracts for corn, for example. And so that's a method that gets you there, gets money in your pocket to pay off bills or buy some prepay and things like that.
We also have low water levels again on the Mississippi River. Barge costs are higher. What is that going to mean? Will that have an impact?
I think that's a concern at harvest. You want to be able to move bushels if the water levels continue to decline and barge rates go up or the amount of barge, how much they can load goes down. I think that's another concern for basis at harvest. So those are some things we got to consider. We got to keep an eye on it. It doesn't look right now that we're going to get any significant rain enough to bring that river out.
Thanks so much, Chuck Shelby, joining us for Risk Management Commodities. That's Markets Now. We'll have more AgDay coming up.